Good afternoon, ladies and gentlemen. I'd like to welcome you to yet another virtual investor forum, this time for Mayberry, Jamaica Equities second quarter financial results. I'm your host, Dan Theox, Senior Vice President of Investment Banking, and joining me on today's panel this afternoon are Executive Chairman, Mr. Christopher Berry. Welcome, Chairman Berry. And our CEO, Mr. Gary Parrott. Great. And if you're looking to embark on your very first investment, hi Chris, hi Gary. If you're looking to embark
Hey guys, afternoon.
Thanks, Gary. If you're looking to embark on your very first investment journey, you should reach out to us here at Mayberry. We'd like to talk to you to see how we can help you to get on track to financial independence. So feel free to reach out to us, send an email or a DM. Now we'd like to get into today's presentation where we'll be looking at the second quarter results for MJE. Chairman Berry, are you hearing me? And Mr. Parrott, are you with us? Welcome, guys. Great. On to the presentation.
Yes, sir.
Yes, Dan.
Great. Thanks for being with us, guys. Okay, on to the presentation. We're looking at the financial results for MJE for the second quarter, June 30th, 2022. And what we can see here, guys, is an amazing 119% increase in the earnings per share, up to $5.43 from $2.02 from the comparable period last year. We're also seeing a 56% increase in the total comprehensive income, up to $5.1 billion for this period compared to the prior period last year. Total assets have grown by 50% to $25 billion, and I'll have a slide where I can show you that. Yes, up to $25 billion, 50% increase in the last year, and 25% increase since since March 31st, 2022, when we last spoke to you. So up 25%, or $5 billion in the quarter alone, and 43% growth in shareholders' equity over the same period last year, up to $21.4 billion. Really impressive. Net book value per share also up 44% to $17.8, and we'll talk a little bit about that going on. And the closing share price, when last I checked, was about $13.37, 44% up from last year, while still trading at a huge discount to the NAV. And we'll talk about that a little bit more as we go on. Next slide, just to show you what's going on, and I hope you guys can see that out there, what's going on with the actual comprehensive income. As I hinted at it, $5.5 billion in net income for the quarter, driven primarily by the performance in the stock portfolio. $265 million in operating costs, and that leads us down to a profit before tax of $5.3 billion, which is 119% higher than last year, same period, where we had $2.4 billion in profitability. Net, we have total comprehensive income for the quarter of $5.1 billion, and an earnings per share of $4.43 for this last quarter, which is up 119% over the previous year. And those improvements are driven primarily by unrealized gains in our investments and associates of $3 billion, or 124%. Moving on to the next slide, just want to talk a little bit about the balance sheet. We talked about that roughly 50% growth in the balance sheet, up to $25 billion over last year, June, which was $16.9 billion, and up even 25% since the $20 billion when we last reported to you guys end of March. So any way you look at it, impressive growth, $5 billion over the last year. More like $10 billion growth over the last year, $5 billion growth in the last quarter alone, while still managing liabilities pretty tightly. And so that is where you see the overall net 43.4% growth in shareholders' equity, which is now up to $21.4 billion, up from $14.9 billion a year ago. So impressive growth in the shareholders' equity, with very low leverage, total liabilities of $4 billion and total assets of $25 billion. And this growth, again, is driven primarily by the awesome performance in the stock portfolio. And we'll talk a little bit about that going on to the next few slides. Next slide. This gives you a feel for the makeup of the top 10, and folks always want to know what's in the top 10 portfolio, and we're sort of showing you what's in the top 10 this year vis-a-vis last year, and you'll see that the top performers are pretty consistent. Supreme Ventures Limited, that's shown massive growth over the last year, 33% growth, or $10.93 from roughly $20 up to $30. CPJ has shown phenomenal growth, going from $4.30 to $14.40, and that's one of my top 10s in my own personal portfolio. JMB has shown also very good growth over the last year, going from $37 up to $44. And interestingly, in the case of JMB, this is sort of my number one favorite stock on the market right now because it's trading at such a very low PE, despite this growth over the last year, and that's about 20% growth. The EPS, the PE, I beg your pardon, on this stock is still well below $8 in a main market where I like to think of the average PE as being 14 times. So when you see a company like JMB trading at 8 times, guys, you need to run out and buy a lot more of it, be like MJE and try to capitalize on that. So here are the top 10 performing stocks. Top 3, very impressive. GK as well, also very impressive. It's a great portfolio, obviously, and we can see the reason why we've seen $5 billion growth in the last quarter. Next slide shows sort of the top 5 additions and top 5 disposals. Again, folks like to have that information, and so we're always keen to show you what we've been adding to the portfolio and what we've been disposing from the portfolio. Again, you can see here we've been buying more of JMB and Grace Kennedy and even Express Caterers Limited. So that's a new interesting play with Express Catering Limited. And so, this gives market likes to know what we're buying, and we like to share that information. In terms of the top disposals, I wouldn't read too much into it, but you do see we did dispose of some Carib Cement, about $62 million worth. Turned over a little bit of LASM and MEEG as well too. Okay, you asked for it, so we provide that information. Next slide shows the top 10 largest holdings in terms of value in the portfolio. And here I don't expect to see any major changes in the last year. Top 2 still are SVL, CPJ. Currently, a small adjustment. Carib Cement was sort of a top 2 holding previously, but as you saw, we've disposed of some Carib Cement, so now Carib Cement still in the top 10, but no longer the second largest holding. In fact, the second largest holding has grown to become CPJ by virtue of that stock going from $4 to $14. And so now top 2 really SVL and CPJ, compared to previously it was SVL and Carib Cement. So I think we've been pretty open about how we felt about Carib Cement and their play to introduce this new charge. We view the shareholders of Carib Cement as extracting profits rather than taking it from the form of dividends. And so we're not as bullish as we used to be on Carib Cement. Still a great stock, but we had some current concerns about that, sort of the way the majority shareholder pushed that through. Of course, now we see dividends starting to flow for the first time out of Carib Cement. So still a good stock to have in the portfolio, but we've decided to reduce our concentration risk, and I'm sure we'll be talking to the chairman and CEO paired to talk a little bit more about that, and I'm sure there'll be questions about it. And I'd like to remind you guys to feel free to start sending in your questions, because we will have a Q&A segment. We'll be happy to respond to any questions you may have. So in the top 10, no surprises there. Usual types of great companies you would expect to see: SVL, CPJ, Grace Kennedy, Derrimont, LASF, Wigton, JMB, Jamaica Broilers Group, JBG, another one of my favorites. We saw those earnings results recently jumping by 43%, and the growth in North America in particular. Great company. I think this is a great top 10 mix for MJE. Next slide. We're often talking about what's going on with the NAV versus the share price, and despite the impressive growth in the share price in the last year, the NAV is outpacing that. And so here we see a situation where the current NAV is at $17.80 compared to $12.42 a year ago, and that pretty much just explains the growth in the NAV. Next slide, I think we'll be talking a little bit more about NAV versus share price. I got ahead of myself. On the NAV, next slide, yes, correct. On this slide here now we see where, again, despite the share price growing from $9.31 last year to $13.37, which is roughly 40% growth, the NAV has grown even further from $12.40 to $17.80, and so the stock is still trading at a 20% discount to NAV, which is surprising. And I really do hope that you folks will get to appreciate the value of an MJE in your portfolio. You've grown our assets from $16 billion to $20 billion, now to $25 billion. And in that top 10 mix, we have stocks that have PEs below 10 times. So it's not that the stock portfolio is built up with stocks with very high PEs. It's a great mix of companies that still have huge potential for growth. And obviously, we're making a pretty big bet on SVL as well, too, which makes up roughly 50% of the total portfolio. And that's a company which continues to grow from strength to strength to strength. So SVL, we saw them breaking $1 billion per quarter in the last quarter. We anxiously look forward to the June quarter result, where I expect no less. We saw MJE itself turning $3 billion in the previous quarter, and now in this quarter coming back with $5 billion in profitability. So again, business is doing exceptionally well. I think the market doesn't fully appreciate the stock, and that's why it trades at a 20% discount. But what you cannot ignore is this, 43% growth in the NAV over the last year, with Mayberry now getting to $25 billion. So we're pretty much up to pre-pandemic levels in terms of the size of the portfolio, with a great mix of assets that are poised for growth. And we'll be talking about that, and I'm sure we'll be getting some questions about that. Next slide shows sort of graphically, again, the line of the NAV versus the share price. And again, you can see here that more often than not, the blue line, which is the NAV, has been above the share price. Only once did those lines cross, but for the most part, the share price has been trading at a discount anywhere from 15 to 20% below the NAV. We can see here over the last 2 years how the NAV took a dive during the pandemic and had a low point in May 2020 of about $8, I would say, and share price followed suit and went right down to about $7.61, roughly about the IPO price. And in the last 20 months or so since then, you can see where the NAV now is up to $20 practically, and the share price is trailing by about 20% thereabouts. So I have no doubt, if you look at the trajectory over the last 12 months, that this NAV is going to continue to grow. Like I said, when you look at the top 10, it's a good collection of great portfolio with assets that are still poised for growth and showing reasonable PEs. And I'm hoping that we're going to come back in the next 3-6 months, and I'll show you that this NAV is now top $20, and the portfolio has gone from $25 billion to higher, despite the headwinds. And we'll talk a bit about the headwinds that are coming: interest rate, inflation, other concerns, monkeypox, whatnot. We're going to have a nice discussion about that. So again, folks, please feel free to send in your questions, and we'll happily address that. And I think that takes us to the end of the presentation, if I'm not mistaken. Are there any more slides, guys? Nope. And so that puts me in a place to get into the Q&A, where I'd like to lead off with 1 or 2 questions to Chairman and then to CEO Gary Peart, who's really the asset manager for MJE. I don't want to mix up the companies, and I continue to be a MIL employee. I've got nothing to do with MJE, so I'm here in my capacity as an analyst, looking at MJE, the awesome results, $5 billion, and we've got the chairman of MJE, and then Gary Peart, who's also pretty much the asset manager, one of the decision makers about the investment portfolio for MJE, alongside with Chairman Berry. So first one has to go to Chairman Berry from me, and the first one is, Chairman Berry, $5 billion in the quarter. I mean, what the hell? We're just coming out of the pandemic. Do you have more legs in this portfolio? Why should I buy MJE after seeing, 50% growth in the last year? Help me appreciate, why you think this asset will continue to perform and do well. Chairman Berry, did you get that question? I think there may be a little lag.
Okay, so I think the main thing that we get from what we're seeing here, Dan, is that you're not hearing me?
I'm hearing you now. Yes, there's a little delay.
Are you hearing me?
Yes, I am.
Okay, I thought you're complaining. Anyways, so the main thing, okay. Yeah, so the main thing we're seeing from this main takeaway should be, hey, you have the pandemic. They say it's the 1 in a 100-year event. And right now, less than just about 2 years later, the portfolio has fully recovered from the pandemic. So it shows that, this portfolio is pretty resistant to shocks. And although we have headwinds coming, I mean, they're nothing like the pandemic. So, the portfolio should continue to grow over time steadily. I think if you can manage a pandemic, then everything else is like a walk in the park.
Okay, thanks for that, Chairman. Mr. Peart, $5 billion in the quarter, MJE, you can't analyze MJE without analyzing Supreme Ventures Limited. Tell me, what's going on at SVL? Stock price is at $30. I mean, how much further can this go? MJE is making a big bet on SVL. What's happening at SVL? What can we expect? Just, whatever you can share to give my folks some confidence about SVL being a part of MJE, because I personally think buying MJE today is the best way to get SVL on the cheap, because MJE is trading 20% below the NAV, and so it's a great way to buy MJE to get into SVL. What's going on with SVL?
Well, thank you, Dan. One of the things that I find interesting is that every time Mayberry or MJE goes to a new high, people think that it cannot go higher. So when we came and we discussed the first quarter of 2022, a lot of people figured, that's it. It's not going to go much higher. We said to people, there's a discount that, occurs that is in the marketplace. And really and truly, you should look at the composition of the equities in the portfolio and see what the outlook is. And you should have an idea as to whether you should be buying above NAV. The results for the second quarter clearly shows that. And yes, I think for the second quarter, most of the positives has come from Supreme and CPJ. So these are companies that are starting to show their potential. Obviously, I'm biased. I mean, we're in a closed period for SVL, so I won't speak much about it. But, we're seeing the potential for both of these companies starting to show. CPJ as one. They've come through the pandemic. They got a hold of their costs. And I think in seeing what the edge of the abyss was, they've ensured that they're not going to get there again. And that's what you're seeing in the business. And we expect great things to continue for CPJ. As it pertains to SVL, I mean, things that I've said publicly already, we're diversifying that business. The core business continues to be very strong. And there are going to be several other announcements to come on SVL. Certainly for the last 2 years, there's been innovation after innovation. We continue to manage the marketplace. We continue to keep the competitors where they should be. And the company continues to grow from strength to strength. Now, trees don't grow through the sky, but, we think whilst there are headwinds out there, Jamaica as an economy is in a good place, or certainly good relative to a lot of other people out there. Whilst they were criticized for it, the interest rate move by the central bank early in the day, has now been seen to have been, the way to have gone. And so whilst other people are now ratcheting up interest rates, we're at the point where, the benefits of increasing interest rates initially are now starting to bear. And we keep our fingers crossed that, we can come through this inflation issue on the right side. And I think it's going to be beneficial to the economy, and ultimately, if you have a thriving economy, it's going to reflect itself in the stock market. And ultimately, the only stock you need to have is MJE. So ultimately, MJE will continue going from strength to strength. I hope I've answered your question.
Absolutely. Thank you very much.
So Dan,
Chairman.
one of the things I wanted to point out, coming off of Gary's point, is that, you know, a lot of our clients, they love the fixed income market. But when you're getting into this high inflation, although interest rates are going higher, I promise you, the only way to beat the inflation is to be in good stocks. We've proved this time and time again. In the worst inflation in Jamaica, the stock market has ended up being a better investment than the fixed income securities. So, you know, if you're worried about the inflation, you got to get some MJE.
Yeah. I mean, Dan, to add to Chris's point, you know, the instrument or the institution, if I should say so, that is the most efficient transmission of inflation and evaluation is a company. And in Jamaica, the companies that are most efficient at passing on inflation and devaluation are the major companies that are listed on the stock exchange. So as Chris has indicated, if you want to beat the inflation bug, you invest in these companies because their nominal profits are going to increase, and ultimately it's going to increase the stock price. And the final thing I'll say on this, you know, I was doing some research and I came across something that has been circulated. I don't know if it's viral, but the point was made that if you take the best 20 days of trading on the NYSE, you only got an additional 2% on the return on your portfolio. So there's 365 days in a year, and if you got the best 20 days, it only increases your return by 2%. So what it is saying is, whilst it's sexy to try and time the market, very few people catch it, and it is better to invest in the market broadly at all points in time because you will get the benefit as the market moves up. You know, and I close by saying this to you. I think CPJ is one of the best examples. CPJ traded between the band of $2 to $6 for several years. And then when it finally broke out, if you were somebody that was trying to time CPJ to get in at the right price, you would have missed the movement from $4 to $14 where it is. And as you know, Dan, it actually traded as high as 24, I believe, before it came back and settled here at between $14 and $15. So again, market timing, even the experts have a problem with it. So, you know, the best thing to do is to start investing, invest now. And again, in Jamaica, the only stock you need to own is Mayberry Jamaican Equities.
Yeah, so we want to welcome Mr. Brian Wood in the house. You know, Brian is one of my old friends. You know, we sailed together, drank a lot of rum together, did a lot of partying together. Brian was one of the top CEOs in the Caribbean for J&J. And Brian is asking, he's saying, you know, what are the factors that account for the tripling of CPJ? So Mr. B, CPJ, they had a rough patch for, you know, about 3 or 4 years, and that really affected the stock market negatively. You know, they went from making $3 million in profit, and over a period of 3 or 4 years, that went to like minus in the millions. So that affected the stock market badly. I mean, the stock. Then they had the COVID came along, and that forced all the companies in Jamaica, and especially CPJ, because they were already on the ropes, to do a massive restructuring. You know, they cut costs, they clean up their warehouse operations, they put in a new technology, and but the thing that most people don't know why they did so well is that their cash flow management in the pandemic was really excellent. They made sure to pay their suppliers, and they paid all their suppliers. So what happened to Jamaica, well, not only Jamaica, in the food distribution market, you know, after COVID, most of the international insurance for these transactions was canceled. But CPJ had an excellent relationship with its suppliers. So we were ready when the market opened back up. We're fully stocked. We could support the hotels. The costs were way low. The efficiencies were way up, and that just resulted in profits moving from minus probably I expect them to hit close to 9-10 million US for their current year end, which is quite a remarkable turnaround. So that's a answer to Mr. B. Wood's question, and great to see you, B. Wood. Keep it going, keep it strong.
Thanks for that, Chairman.
Over to you, Dan.
Thanks for that, Chairman. And on CPJ, you couldn't be more correct. They've sorted out their warehousing issues. They have a state-of-the-art warehouse system. They've invested a lot of money in reducing operating costs during the pandemic. They've done a good job with purchasing. Big up to Tom Tyler and Mark Hart for the exceptional work they've done. And as you said, they turned $5 million for the half year, $7 million for the three-quarter year period, and they look like they're on track to do $10 million for the full year. And let me declare interest. I think we saw it in the paper recently or advertised on the Jamaica Stock Exchange that they've hired Mayberry as their special advisors to help restructure their balance sheet and to help with a possible business acquisition that they're looking at. So that's public information. And so we are working with CPJ to help them blow up that business even further. I really do look forward to the full year results. And I think you're spot on, Chairman. They're going to make $9-10 million US and continue to grow that business. So great job, Tom and Mark. We look forward to bigger and better things. They've got a new CEO in there, Todd. Todd met you. He's a great guy. I think he's going to help transform that company, and we look forward to bigger and better things from CPJ. Chris, Jamaica Broilers Group. Tell me a little bit about JBG, why you like that stock, why it's in your top 10. We see this is one of the few top 10s where the stock price in the last year fell off from $35 down to $28. Results just came up by 43%. Now that stock's trading at a 10 times PE, even at $28. I personally think great things to come, but tell me a little bit about JBG and why you have such faith in them.
Well, first thing is that you got to remember that we were the lead broker for taking JBG public. And so we know that company. We've been working with them for a long time. I think the main thing for me is that, chicken is big business in Jamaica. Jamaicans eat a lot of chicken. We're one of the highest consumers per capita in the world, especially when you normalize that for the average earnings of the citizens. And now they're expanding their business into the U.S. market. And, the U.S. market is a gazillion times bigger than the Jamaican market. Normally, most Jamaican firms that go abroad have a lot of problems, but they took the strategy of going in small, biting off small chunks, learning the investment banking game, how to buy companies and expand, and how to integrate them. And they've been doing a real fantastic job. And, we can see the revenue split has changed dramatically for that company now. Almost 50%, about 50% of their revenues coming out of the US. So I think that's going to grow. And I think definitely, they're no longer capped by the small home market of 3 million people. So, this train has already left the station, guys. It hasn't sped up yet. You got to get on that bandwagon or just buy MJE.
Thanks for that, Chairman. Gary, next question for you, and I'm going into the questions coming in from social media. They're coming in fast and furious. From Damani Walder, he wants to know what are the expected benefits to MJE or MIL from the planned restructuring that was just announced?
Well, as we indicated in the release, there won't be any change to shareholder value. So we're rearranging the companies, but existing shareholders will not see a diminution in their value. And it's really done to ensure that in keeping with the modern regulatory requirements, etc., Mayberry is in line with that.
Okay, very good. Devin says, Mayberry as usual, setting the standards for financial reporting, no delayed reporting from these guys. Thanks for that, Devin. Jerry Mack. Gary, this one for you or for Chairman. I noticed that MJE reported buying its own shares in its top 5 editions. What's the framework that is allowing that to be dealt with in terms of a share buyback?
It actually was an error in terms of the reporting, and we'll make a change on that.
Okay, thanks for that.
So we actually did not buy it back. Yeah.
Thanks for that. Next one comes in from Khalil Mitchell. What is the outlook for MJE's ability to maintain this growth rate with the fiscal risk being faced? So, not too sure which one of you want to take that.
Well, we can let the chairman go first.
Yeah, well, so there's no fiscal risk on the side of MJE. If you think about it, our debt is a very small fraction of our equity. And, we own companies like Grace Kennedy. It's over 100 years old. I don't see Grace Kennedy packing in their bags and going anywhere. SVL, CPJ, these are all great companies. Interest rates going up a little. I remember the days when interest rates in Jamaica were 50%. All of these companies, they were still doing great. So the big problem for investors is how do you maintain your value when you're suffering this high inflation? And the way you do it is you ride on the back of the best companies in the country. And MJE owns all of them. So just buy some MJE.
Thanks.
Well,
Gary,
what I would add, to support the chairman's point, Dan, investing in the business of investing is not temporary. The business of investing occurs in many different environments, And what's interesting, a young entrepreneur said to me yesterday, he has never done business in a rising interest rate environment. So when he started his business, interest rates were trending down and getting lower and lower. He had no problem accessing capital. Any story he gave a financier, they gave him funding. Now that is changing. You hear people say when the tide is rising, all boats rise with it. But when it's going back out, we know where the rubber meets the road. And so as specifically to MJE, to give you an idea of the robustness of how we manage this portfolio. In March, I think it was around the middle of March 15, March 16, the Jamaica Stock Exchange created. And within 14 days, over 30% of the value of the market disappeared. And MJE lost almost 50% of the value at the time. And the debt was still barely 30% of the total portfolio. Are we expecting to see that kind of 30% reduction again in the near future? No. And so we have proven that this portfolio is very robust within the context of this market. We'll borrow money if we see a compelling reason, and we have done that, but we keep the borrowings relatively low, as can be seen. I think the total borrowings now is just under $4 billion on a $25 billion portfolio. You can run the math on that. So it's very robust. And, one of the things I mentioned in the last quarter, why we love SVL in this portfolio, SVL throws off a healthy dividend stream. So you have a lot of cash coming into the portfolio, which allows it to more than adequately services its debt. But
so what you call a lot of cash, like how much a year we get from SVL in cash?
You're looking at anywhere between $400 to $500 million in a good year. And each year that dividend is increasing. So the key point, I'm answering the question why MJE. Within the structure of the companies, it is relatively well diversified. So you have cash being thrown off by the different companies. And think about it. If in a low interest rate environment, these companies were thriving, once interest rate starts going up, let's look on some of the companies in the portfolio. SVL has a cash pile. In a high interest rate environment, you're going to earn more interest income from that cash pile. Grace Kennedy has over $30 billion in cash sitting on his balance sheet. In that high interest rate environment, you're going to earn significant interest income from that. They're also the number one remittance earner of foreign exchange. So again, if you have the valuation, you're going to benefit from that. So as you go through the portfolio, you see companies that are very resilient. And I close by saying, I know that over the last 3-4 years, you've had a lot of new people come into the market who have never seen the stock market operate in a high interest rate environment. But I take the time to remind them that this market has been in operation from the 1960s. They have seen the lowest of the low, the highest of the high, and the companies are still here vibrant and strong and continuing to create value. And again, if you're not sure how to manage in these times, just buy the only stock you need to own, Mayberry Jamaican Equities.
Thanks for that, Gary. I mean, you guys have been doing this for 30 plus years, so I think you know a thing or two about equities. Next question comes in for you, Chairman, from David Rose. He's saying, with your close relationship to tourism, Sir Barry, what's your outlook on Express Catering Limited with the current demand for air traffic?
Well, I can't really speak about Express Catering, but what I can tell you is that what I'm seeing in Jamaica, and as I travel and reports out of Europe, I haven't been to Europe since the pandemic, is that the cabin fever has definitely affected the traveling public. People are out, they're traveling in numbers. In some places, they're having serious constraints because they just don't have enough capacity at the airports, the airlines. The hotels are not so bad, but especially with airlines and airports, there's definitely a capacity problem. What we also know is that in Jamaica, we're seeing some pretty active construction starts with respect to tourism. You know, I have heard of several projects, big projects that are literally starting this year. And so, you know, the future for tourism in Jamaica is bright. And that should definitely bode well for ECL, if you look at it that way.
Yep, thanks for that, Chairman.
Yeah, I mean, I support the chairman's point. Dan, you would have seen that during the quarter we added to the position for ECL, and you know, based on information that we're seeing so far, you know, we expect at least another 5,000 rooms over the next 3 years. The people to fill these rooms have to come through the airport. So ECL is one of those companies that's a rebound company. It was affected badly in COVID because obviously nobody was coming here. But what we're seeing is that, you know, travelers are coming back in droves. ECL, you know, has to make some investments, etc. So that might slow the pace of the recovery, but certainly it's a company that I think over the next year or two is going to do extremely well. Just simply because, I mean, right now the biggest airport and the most modern airport on the island is Sangster. And they have the expansion plans for Sangster, which will increase the throughput that is expected. So because this company has all of the restaurants, or the majority of the restaurants in the airport, you know, they're expected to do extremely well from that increased traffic.
Absolutely. And, you know, they could be a big comeback kid like CPJ. So travel traffic is not to pre-pandemic levels yet. We've seen that they're expanding in the Montego Bay Airport, and Express has had to move their location to that expanded area where they think they'll have potentially 30% more traffic. They've added some new brands like Bob Marley restaurant.
Yes.
And so, you know.
And that's huge.
Huge. So I'm going to predict that this could be one of those stocks that you see go up by 100% in value over the next 18 to 24 months, led by a great team, Ian Dare, great relationships, great brands that they represent there at the airport, and the correlation between their profits and traffic coming through the airport is very high. So as we head back to pre-pandemic levels over the next couple of quarters, I expect their earnings to come back strong, and the fact that they've expanded at the airport bodes well for them. So I think it's a great stock to get in on, and I can see why MJ went and did it. Okay, I think we have enough time for 2 or 3 more questions from online, and one more from David Rose. He's saying, Gary, you guys have pretty much very little debt on MJE. However, with the Fed reserves going up and BOJ rates going up, you know, what's your outlook and your thought process?
Again, I alluded to a couple of things. You know, when the BOJ started to increase interest rates, it came under pretty severe criticisms from a lot of different places in Jamaica. But we now see where the Fed is now being criticized because they waited too long. So, in another way, I mean, it's actually congratulating the central bank for moving as early as they did. The benefit of that is now that the US is moving up rates, Jamaica is being ahead of the curve. You know, when you move interest rates, take a little time for it to transmit throughout the economy. And so we're now at a point where that transmission is now being felt. We're seeing where credit is pulling back in some instances. I think ultimately we're going to benefit from that. So, you know, the expectation is that when we get into the fourth quarter, we should start to see inflation tempering. We see BOJ using all the tools. So you would have realized that the dollar at the start of the year was 155, and it's now trading between the 151 region. And so obviously with a revaluation of the dollar, imports are cheaper. So ultimately that imported inflation is not as high as it would have been. So I think once the central bank gets inflation under control, you know, the impact from the interest rate movements in the US will be felt differently. And I think that would be, you know, for the holders of assets, because what you're seeing is that the increase in interest rates in the US is affecting J-dollar global bonds, which you've seen the prices of that have come down. But sorry, once you're an expert holder of these portfolios, you should be diversified. So you would have some cash in your portfolio to be able to withstand that pullback in prices. So that's the only concern I have on that side. I think what we're doing here in Jamaica, we're pretty ahead of the game, and we'll benefit from that. You know, everybody is waiting to see how far the Fed will go. You know, the last CPI that came out, I think it indicated that, you know, point-to-point inflation was 9.1% in the US. It's almost unheard of. You know, so I would expect more interest rate increases in the US. But I close by saying, you know, they can only raise interest rates to a point where you start to affect demand. And what's likely to happen is if they increase it too fast, too rapidly, you're likely to create a recession. And then if you create a recession, you're going to have to pull the interest rates back down. So I think at this point, based on the available data, I think we're in for a rocky ride, depending on what your portfolio is. And I think on the balance of probability, if I had to invest my cash, I'd want to be investing the cash in equities that have a high dividend yield until we get out of this position of inertia. You know, but I think over the next 3 to 6 months, we'll get a better feel for what is likely to happen in the US, and then Jamaica will fall into place.
Great. Final question from social media before you, Chairman. And Chairman, I'll let you have closing remarks after this. Is Gary, when can we expect the MIL and MJE AGMs?
So we, as you know, we have announced the reorganization of the Mayberry Group, and we're waiting the court order to finalize the AGM for certainly Mayberry. And I think it will follow through for MJE at that point in time. So for MIL, it definitely is a function of when the court order comes through. And as soon as that happens, we will alert the public. If I was to guess in terms of the timelines, we would expect sometime in September or early October.
Good deal. Chairman, closing remarks for you. Any comments about outlook, market, MJE before I close up?
Yes, so my closing remarks would be, I think definitely investors, you know, now is definitely a time for caution with interest rates. My latest feedback from the Jamaican market is that already we're beginning to see some slowdown in consumer demand at the lower levels. You know, this could be a real slowdown in a recession. I don't know. We have the tourism going positive on the other side, so maybe it all balance out and we'll stay in the positive. But certainly the US, I don't see them missing a recession. They're definitely going into a recession. And as Gary said before, once they hit recession in the US, then, the interest rates will come tumbling down and the BOJ will follow. So, so the interest rates go up, so they will come down. All you have to do is make sure that you're betting on the right horses and you will be fine.
Excellent. And with MJE, we help make your life easy. So, folks, again, to recap, $5 billion profit in the quarter, assets up by 20%. It doesn't get any better than that type of performance. And I'm really proud to be a part of the team, to experience this and watch this happening. We've seen the share price grow by 43% and still be at a 20% discount for NAV. So MJE looks like the perfect storm to me, guys. I'm going to run get me some more of it if I can, especially since we just came out of blackout now that you guys released the results. So great performance, Mr. Berry, Mr. Peart, really appreciate it. We look forward to the next quarter for sure with bated breath. Well, folks, and that's it for today's live stream. And I'd like to thank our viewers for tuning in and sharing their thoughts. Your support is always appreciated. And I'd like to thank my panelists, Chairman Berry and Gary Peart, for their usual participation and great insights that were provided today. We share our live streams dates. We'll be sharing our live stream dates for upcoming guests on our official pages, so follow us for all things form related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Remember, folks, keep safe, and wise investors, slow and steady wins the race. Goodbye.